Economic impact of decentralized finance. Decentralized finance, DeFi, leverages blockchain technology to transform traditional financial models. By removing intermediaries and offering transparent, accessible financial services, DeFi is impacting economies, widening financial access, and reshaping how people engage with financial systems. This section examines the current DeFi market landscape, its growth drivers, economic impact, and disruptive potential. Current DeFi market landscape total value locked, TVL, in DeFi protocols, surpassing $150 billion, is a primary indicator of DeFi's growth. This metric reflects capital committed across various DeFi applications, such as lending, borrowing, and decentralized exchanges, demonstrating user trust and adoption in DeFi services. Growth in protocols and users. With over 1,500 active protocols, the DeFi ecosystem has evolved rapidly, introducing services like yield farming and decentralized lending. User adoption has surged, with millions globally drawn to DeFi's higher yields, reduced reliance on intermediaries, and greater financial access. Key drivers of DeFi growth. Technological advancements upgrades like Ethereum 2.0 and Layer 2 solutions have improved blockchain scalability and transaction efficiency, supporting more users and allowing for larger transaction volumes within DeFi. Institutional interest. DeFi's high returns and diversification potential have attracted institutional players, adding stability and fostering growth through greater capital inflows. Regulatory developments. Clearer regulations are helping DeFi mature, with supportive frameworks emerging in regions like Europe and Singapore. Balanced oversight could reduce risks while promoting broader adoption. Market projections. Analysts predict DeFi's TVL could reach $300 billion, driven by wider adoption, protocol expansion, and new use cases like tokenized assets and decentralized insurance. Integration between DeFi and traditional finance is also expected to increase, blending DeFi's innovations with conventional finance for broader accessibility. Economic impact of DeFi financial inclusion. DeFi has the potential to increase financial access for unbanked or underserved populations by offering services to anyone with an internet connection, breaking down geographic and economic barriers. Disruption of traditional finance. DeFi's model challenges traditional banks by offering low-cost, accessible financial services. This competition pushes traditional financial institutions to innovate, creating a more user-centered financial ecosystem. New investment opportunities. DeFi creates unique investment options such as yield farming and decentralized lending, which offer higher returns but require managing more complex risk factors than traditional investments. Economic disruption and challenges. Disintermediation. By eliminating middlemen, DeFi enables direct peer-to-peer interactions, reducing costs and increasing transaction speeds. Smart contracts automate financial agreements, reducing human error and fraud risk. Innovation in financial products. DeFi offers more flexible services than traditional finance, including decentralized lending and algorithm-driven interest rates. These innovations attract both retail and institutional investors. Challenges and regulatory uncertainty. DeFi's decentralized nature complicates regulatory compliance, posing risks around fraud, security, and investor protection. Smart contract vulnerabilities also pose a challenge, requiring ongoing auditing and development to ensure system reliability. Opportunities and threats of decentralized finance. DeFi offers a transformative but complex landscape for both businesses and individuals. While it brings innovative financial tools and broader financial access, it also introduces substantial risks. Opportunities for businesses' efficiency and cost reduction. By using blockchain and smart contracts, DeFi streamlines processes and reduces intermediary costs. DeFi offers alternative funding avenues through decentralized lending, initial DEX offerings IDOs, and security token offerings STOs. Threats for businesses. DeFi lacks a global regulatory framework, creating compliance challenges. Smart contract vulnerabilities. Smart contracts can contain coding errors that lead to security breaches or losses. Operational risks. The decentralized structure of DeFi platforms can introduce risks like platform failure or technical errors. Opportunities for individuals. Access to financial services. DeFi removes barriers, providing services like lending, borrowing, and investing to underserved populations. Individuals gain financial access without traditional banking requirements. DeFi strategies such as yield farming and staking offer high returns. Threats for individuals' security risks. DeFi users face risks like smart contract bugs, phishing, and hacks. Individuals need to employ security practices, such as using hardware wallets and verifying platform legitimacy. Complexity and learning curve. Navigating DeFi's technical aspects can be challenging for newcomers. Individuals must invest time to understand DeFi concepts to manage risks effectively. Regulatory risks. Evolving DeFi regulations can impact user activities and investments. Users should monitor regulatory developments to anticipate potential impacts on their assets. High volatility in DeFi markets can lead to substantial losses. Individuals must approach DeFi investments with caution, prepared for potential financial fluctuations.